Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to be showing you two charts. Firstly, a chart that's never been wrong, and it only has 5 previous signals. And it's a chart I showed you a couple of weeks ago when it had just crossed. And now it's actually confirmed that cross. And I'll also continue the theme on the 60-day cycle to tell us exactly where we are and what we can elicit from the information that it's giving us. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual disclaimer, please remember everything in my videos is just for educational purposes. Nothing should be taken as financial advice, as nobody knows what's going to happen in the future. So please do your wider research before you make any investment decisions. So with that out of the way, I'm going to go on the 12-day chart. It's a chart I showed you a couple of weeks ago when it had just crossed over. So here it is. This is the 12-day chart, and I'm going to show you the MACD, which is the moving average convergence divergence. So the MACD is a trend following. So when the momentum is coming into the market, the blue line crosses above the orange line here. And when that happens, either at the zero line, which is this line here, all along, between the green and the red bars, when that happens either at or below this neutral line, then you know that there is a surge in the price coming up. So here, the first time we ever got this was back in May 2012. And as you can see with the price action here, right at that point, the price was about to surge all the way up to this level here. The second time this MACD crossed over was here exactly in May 2015, so 3 years later. These are not signals which happen lightly, and this happened to take place at exactly a time when we were all going sideways over here, before the big break to the upside towards the 2017 end of the bull market at that time. So that was right at the start of the bull run in 2015. The third time the MACD crossed over was here in March 2019. And once again, this was extremely well timed when we were going sideways here. I remember this being a very painful sideways move for several months here before we got this big Marubozu candle here around the 1st or 2nd of April 2019. And this was the start of this 300-400% move up here to nearly 14,000. And you can see the next one, the fourth time this crossed over, was right at the neutral point here, 0 point. And once again, it was extremely well timed to coincide with the end of the COVID situation over here, when we came back up in a V-shaped recovery, and we got this cross around the end of April 2020. And that just happened to be the time when we went on this run here. Nobody was expecting this. Everybody thought that after the V-shaped recovery, we're going to be going down. But as we know with Bitcoin, it has a habit of shocking everybody. It does the opposite of what we always think. So we now move to what's happened currently. Once again, we've been going sideways for many months now in this particular range, from the top at 25,000 to the low of 15,000. And once again, we've got our cross, and this is the 5th cross in 12 years. So on average it happens every 2 years or so. So the question is, are we about at the beginning, on the cusp of moving to the upside once more? I think everybody has to make up their own minds, but we can only present what's the facts in the charts here, and that is that we've had no false signals below the zero line when the MACD has crossed. So only time will tell. That doesn't mean that we can't have one little flush out first before this goes on, because these are long-term signals. If you were to buy in the past when these had crossed over, then certainly you would have been very much in the money here. But this is certainly another indicator which is telling us the opposite of what everybody here is expecting, that we're going to be going further down to 14, 12, 10, whatever the figure you have in mind. Everybody seems to have a downward trajectory move in their mind, because the psychology that's been created here is that every time we have a little bit of optimism, it's dashed by a further move to the downside continuously. So that's what leads to the feeling down here that we're obviously going to continue with that. We are creatures of habit, and that's the habit that's been created. But certainly, sooner or later, that's going to change to an upward move rather than a downward move. When that happens, obviously nobody knows. And that's why I'm going to have a look at the 60-day cycle to give us a little bit more of a clue as to what's going to happen in the shorter term. If you've been following me on Twitter, you'll know that I've been posting this particular chart over here, which was giving the targets that at the end of this 60-day cycle, what can we expect the price to be going in the next 10-15 days or so. And if you want to follow me on Twitter, I have a link at the bottom of all my videos. So this is what I was really showing here. It may look like a complicated chart, but as you know, I've been following this 60-day cycle, and the last cycle finished here after day 63. So that was the end of the previous cycle. And the current cycle started obviously from here. And this is the midpoint here, the white line here. And then the red line, this vertical red line here, is the 60 days from the beginning of this cycle here. And usually in these cycles, when the cycle begins, we normally have some sort of a relief rally. And that rally normally tops out either just before or just after the midpoint. And that gives us a clue as to what may happen after the midpoint in terms of creating a higher low or a lower low. And usually on the whole, if we top out before the midpoint, then we have more days to go down in the rest of the 60-day cycle, which gives us some sort of an insight that maybe we're going to create a lower low, especially in a bear market that we've had here, where it's consistently done that over the last 12 months. But somewhere along the line, this is going to change and the turnaround is going to come along. And the 60-day cycle is our way of actually picking up that signal earlier than most people who don't follow the 60-day cycle. So here we are, and we called all this rally all the way up to the middle point here, and this is where we thought was going to be the top. But then we had another surge, and we found resistant point at 18.2 was going to be our top here. And that was confirmed by this candle here, the Gravestone Doji candle we got at the top of this rally here. And since then we've been saying that the next part of the cycle, i.e. the second half, is obviously going to be going into the 60-day cycle low. And where that's going to be will give us a clue as to whether we've ended the bear market or whether we're going to continue with it. And that will be dependent on whether we create a higher low over here from these lows here. If we create another higher low over here at the end of this cycle, before we move into the next rally, into the first part of the next cycle, then that gives us an idea that it may well be, with a higher degree of probability, that the 15,400 over here may well be the market bottom. Now, I know a lot of people on YouTube and everywhere else have this idea that it's going to go down to 14, 12, 10, and it may well do that, of course. But we have to look at what the charts are saying and look at all the possibilities and the probabilities, because there's nothing certain in charts, only probabilities. And in the last video, I showed you that while the first part of the 60-day cycle is the strongest part and the next part is the weakest part, however, the last 10-15 days of the 60-day cycle is the weakest of them all, because this is where you normally have the flush out and big massive move to the downside, and we've got to be aware that this can happen at any time. However, up to now, as we can see quite clearly, the three levels that we have to keep in mind are these levels here. We came down on this candle to 16,273. I would suggest that as we're coming down here now into this window of the 60-day cycle. So what I've done is I've put this window at 5 days either side of the 60-day cycle, because the 60-day cycles are obviously not rigid in terms of the 60 days, but you have to give it flexibility, give of about 5, 6, even 7 to 10 days even either side. But on the whole, they tend to remain within about 5 days of either side. So we're about to enter into this box very shortly, and we're on day 50 here today on Friday the 30th of December. And we can see that we've been having a rundown to this level here at 16,273. We've had a minor rally back up to these levels here at 16,900, and now going back down again. So my thinking is that this level here at 16,273, this is the first target for this to break, and there is a very high degree of probability, as we've got 10-15 days more to go, that this will be taken out very shortly. And then the next level to look out for is this one here at 15,992. So somewhere along the line, we're going to be probably going like this. And this will probably be taken out as well. The big level is really this one here at 15,460. And that level is really critical, because that will tell us whether we're going to make a lower low from here. If that is going to be the case, then the likelihood is, the probability is that we're probably going to go much further down towards those levels that a lot of people are thinking of, which is the 14,000, 12,000 and 10,000. However, considering that we've had the problems with Genesis, Greystone, BlockFi and Binance in the news with a lot of negative energy behind them, considering all that with the contagion of the FTX scandal over here, the price, I would say, has remarkably stayed quite healthy and well above the lows that we made back then at the 15.5 level. So there is a very good probability that Bitcoin could actually shock everybody like it normally does. And instead of the expected move down to these levels down here, we may well just go sideways into this 60-day cycle here, the 60-day cycle low, and start moving towards the 18,000 once more over here. And as I've said in the last few videos, that would be very, very bullish, considering the backdrop of everything that's happening with the exchanges. Because if it wanted to make lower lows down here, it had a perfect storm with all the exchanges, with all the FTX scandal problems. It had a perfect storm here to dump very, very easily, and it's not done that. So whatever anybody's saying about charts and what's happening in the charts, this is really the most important thing that's going on. The 60-day cycle, we're coming into the 60-day cycle low, and there are just two levels that you really need to look out for. Very simply, do we come back up to 1718 over here instead of going down to these levels, which would be extremely bullish if we just turned around here where we are now and started moving towards the 1718. Now that would really put the cat amongst the pigeons. Or do we come back and make a lower low from this 15,460 down here somewhere? So this is the conclusion. This is the level to look out for. 18,200 here and the 15.5 level down here. The expectation would be that if we did finally make our way up to the $18,000 mark, the expectation here would be that you would be getting some sort of a rejection over here, which generally would happen. But this is where everybody was trapped at 18,000. And it may well be that Bitcoin traps everybody here, that instead of coming down from here, it has a big surge up and then off we go as part of the next bull market. So only time will tell. But certainly these are the two levels that we've got to look at. And everything in between, if you're trading here, you're really going to get chopped out. The best way I would be doing this would be to actually wait for a big move above the 18,000 mark, so that you can catch the rest of the bull market, or wait for some support here, and if this breaks, then basically we just have to wait for a price lower to get more units. Okay, so I hope you found all that valuable, and if you did, then please do remember to like and subscribe and to turn on the notification bell. And if you've got any comments, questions or suggestions, then leave them in the comments below. Okay, until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.